Hi everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's video I'd like to look at how the YM unfolded yesterday. That was Monday the 28th of April. So let's have a look at the 3-minute chart of the YM. As we can see, there were 3 setups yesterday. There was a buy setup here later in the day, but this was against a red STF. Then there were 2 sell setups earlier in the day which were on black STF. So for standard traders, you'd have avoided this buy setup later and you'd have taken these 2 sell setups earlier in the day. So let's see what would have happened. You can see here we have a history triangle here. This allows you to place the analysis on, and you can see that there was a potential short trade here that was just taken in. The market then went back up and stopped you out. The stop out would have produced a 1-hour loss. It's important to understand that in all trading we will always make losses, but the trick is keeping the losses small. This is why we use correct position sizing. Here we're risking 2% on a sample $20,000 account, and that would have meant trading 8 contracts at this entry and stop level. But the trick is having profits that are larger than the losses, and we'll see how that unfolds with the very next setup. So therefore the first setup of the day would have been a losing trade, so minus 1 hour loss. We then had another sell signal here. Let's place the analysis on. This one here worked out beautifully. In fact, this was actually the very bar of the high of the day, so getting short there would have been a lovely place to be short. The profit at the first target would have been 6.7R, in other words 6.7 times greater than the initial risk. That's what's so good about using position sizing, in that the profits are much larger than the losses when the profits come through. Let's have a look at the standard trade management guidelines. When the market comes down to the first target, we look at the strength of the STF, that's this indicator down here, and we see whether the indicator is less than or greater than or beyond our strength band, which is our grey band here. And as you can see at this particular point in time, it was well beyond it, in other words greater than. If this is the case, we then say that the market is what we call strong and therefore likely to trend further. Therefore we use our ATR stop, which is our red dots here, to then trail the market a little bit further. And as you can see, this would have held you short in this consolidation and then kept you short all the way down to, if I grab and drag this, all the way down to this level here, where you'd have been stopped out for, well, an absolutely massive profit of just over 12 times the initial risk. For those of you who use the trade module in the MTP RT add-ons, this is a very good additional tool to use, because this not only allows you to place your trade really easily and quickly. In other words, once you place your analysis on, you can then click trade and it will place the orders for you, including the correct position sizing, but also you can actually select it to, at the bottom here, do the auto ATR trailing stops. You can select it to do that. You see I've turned it on down the bottom right hand corner, and what that means is when you reach the first target, it will then look at the STF and then decide whether it's weak or strong, and therefore it will either come out at the first target there, or in this case it will automatically move the ATR or automatically move your order down with the ATR stop, and as such would have held you down here for a 12-hour profit. So the trade module here is a very good tool for you guys who are using the MTP RT add-ons for NinjaTrader 7, which is what we've got here. So for the standard trade management guidelines, the YM was an absolutely amazing day yesterday. Let's have a look at the advanced trade setups, because this is what we were discussing in yesterday's webinar. We had a prior pivot here, and what we're looking at was the market had gone beyond this pivot, and we were saying that the next pivot high was probably up here. So from a more advanced trade management guidelines perspective, just take the trade model off there, the large degree trend was still up. So we actually said in yesterday's training webinar that these DP sells up here would probably be against what we consider the large degree trend. However, we did have a closer look at this and then look at the minor pattern going up into this high. If I right mouse click, do Elliott wave intermediate, you can see this was actually a 1, 2, 3, 4, 5 with the high right of the typical wave 5 WPT, and we actually said that if it was in your trade premise or your trade plan to take a DP sell at the end of a 5-wave sequence, then this would have been a perfectly good trade to take. Myself, I said that if you did like this pattern here, and you did, or you were worried about the large degree trend, in other words, you were worried that you hadn't reached this larger 15-minute resistance area, then what I suggested doing is, when the market gets to the 100% initial risk level, you then bring your stop to break even, and this is what happened during the webinar yesterday. So there's the 100% initial risk level. As you can see, the market got down to that and it wouldn't have stopped you out. So this is what we teach, is we have our tools in MTPredictor that are designed to protect yourself, keep your losses small, and also control your initial risks. And this is why I suggest, if you are in a trade or you wish to take a trade that's slightly more aggressive than the ones you normally wish to do, but you still like the pattern and still want to take it, the use of this 100% initial risk level is a very good tool to do. So using this 5-wave pattern and then the 100% initial risk level would have allowed you to take that short trade as well. Let's have a look at the where the potential support zones were. So let's just take these off, as we know these were not relevant. You then go back to the prior pivot, which was this low here. Remember, our decision point levels are on the chart in advance. They're on the chart there before the market even gets there. So this decision point support zone would have been on here before the market even got down there. If we now look at our 3-minute chart, just look what that allowed you to do. There you go, it actually managed to catch the very low of the day absolutely perfectly. This was also on a high volume VSA spike here as the market reversed off that low. So if you're really aggressive, you could have said, as the market hit that level, perhaps you want to trail just at the, say, the 1-bar high, which, if you're using the trade module, is also a tool we have in here, that if you're in a trade, you can then say, click on this bar or this button here that says bar, and that means it trails at the 1-bar high, or 1 tick beyond the bar highs if you're short, 1 tick below the bar lows if you're long. So that would allow you to lock in a slightly bigger profit, and this would have turned $360 initial risk into just over 4,900. So a very, very good trade indeed. But the point I'm making here is that you'd have known that this support level was here ready for you before the market even got there. So as it came down and hit this larger degree support zone, you could then make an informed decision to then adjust your stop loss or take action appropriately, knowing full well that the market was likely to make a reversal here. And boy, did it reverse. As we can see, this now the very low of the day before there was a very strong rally up into just before the close there. If you've been a really aggressive trader, you could have looked to get a long trade either off the low or off the initial correction there. But that's not what I want to cover in today's webinar. Today's webinar is about the automatic setups, these two here, particularly the one that caught the high of the day, the standard trade management guidelines, which would have then allowed you to move to the ATR stop to then trail down to this particular area here for a potential 12-hour profit. Also then, for the more experienced traders, the minor pattern going up into that high for a 5-wave sequence, then particularly this decision point, 15-minute larger degree decision point support zone here that allowed you to catch the very low of the day as well, or at least know that that support was there to then adjust your trade management strategies accordingly. So overall, a very good day for MTPredictor yesterday using the standard trade management guidelines, with this lovely short trade that basically had you short from pretty much the high of the day, and if you'd used the larger degree DP support zone, you could have been coming out for a very, very nice profit at pretty much the low of the day. So an absolutely brilliant day for MTPredictor yesterday on the YM.